You're listening to AI Prism from Seoul Economic Daily.
A Korean chemical maker just raised half of what it planned, and its board now has a debt problem it cannot postpone. Short pause. SK Hynix is restarting a Chinese fab it left as a bare frame 4 years ago. Hanwha is bidding for a second American shipyard, this one tied to nuclear submarine programs. Lotte sold a profitable rental arm to a private equity buyer at a discount to close its funding gap. Each of these is a capital allocation decision made under someone else's constraints. It's Wednesday, August 12th. Let's look at a business story shaping corporate Korea. Korean groups are funding AI-driven expansion and deleveraging at the same time. Memory demand has pulled NAND pricing sharply higher, reopening projects that were shelved during the downturn. Companies with weak core earnings, meanwhile, are selling non-core assets to hit debt targets set for this year. Here's what the numbers show. Solidigm restarted construction on SK Hynix's second Dalian fab, adding monthly wafer input of about 50,000 to the existing 100,000, roughly a 50% local capacity increase. NAND prices rose close to tenfold in a year as AI data centers drove enterprise SSD demand. SK Hynix is investing 19.1 trillion won, about $13.6 billion, in the Cheongju M17 fab, with its first cleanroom opening in late 2028. Matter of fact, Hanwha Solutions' rights offering closed at 1.17 trillion won, around $840 million, 51% below the 2.4 trillion won first planned. Only 263.6 billion won, roughly $190 million, of that can go to debt repayment, against 3.4 trillion won of maturities across this year and next. Its net debt climbed from 7.27 trillion won at the end of 2023 to 12.69 trillion won last year, and its debt-to-equity ratio went from 81% to 196%. Hanwha Defense USA offered $1.05 to $1.2 billion for Austal USA, which employs about 3,500 people in Mobile, Alabama, and supplies submarine modules to General Dynamics Electric Boat. Lotte agreed to sell Lotte Rental to TPG for 1.31 trillion won, about $940 million, more than 23% below the per-share price struck with Affinity. So what does this mean for executives running Korean operations and supply chains? Earlier, we said each of these is a decision made under someone else's constraints. Here's what that actually means for you. Pause. Regulators, credit analysts, and buyers are setting the timetable here, so board discussions should start from the approval calendar rather than the strategic logic. Watch equipment move-ins at Dalian from November, with mass production targeted for the first half of next year. Watch Hanwha Solutions' third quarter, when it plans to raise a further 300 billion won by selling down Hanwha Impact and Hanwha Hotels and Resorts Holdings. Watch the U.S. Foreign Investment and Defense Counterintelligence reviews of Austal USA, which will define how far Hanwha can go into classified programs. That's today's AI Prism CEO. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.